Welcome back to the Deep Dive. Today we're going to really dive deep, as the name suggests, into a pretty fascinating global market, metal
Okay.
fabrication. And we're going to be pulling all our insights directly from a really comprehensive 2025 market report. So consider this your shortcut to becoming an expert on this market.
That's right. We've sifted through a mountain of data for you to bring you the key takeaways. You know, what's really happening in the metal fabrication world right now in 2025, and maybe even more importantly, where things are headed.
Okay, so let's jump right into this. The report estimates the global metal fabrication market to be worth, get this, a whopping USD 24,860 million in 2025. But this is where things get really interesting. That figure is not just static; it's projected to grow significantly.
Yeah, it's expected to reach USD 300 and 793 million by 2033.
Whoa, huge growth.
Yeah, that translates to a CAGR, a compound annual growth rate of 5.2% over that period. So, just to put that into perspective, you know, a 5% annual growth rate basically means that the market doubles in size roughly every 14 years. So we're talking about some pretty significant expansion and compounding growth in this sector.
And what's behind this upward trend?
Well, the report highlights a couple of key factors here. One is the growing demand for metal products that are not just off the shelf, but rather customized, and precision engineered. I mean, think
Yeah.
about it. Every industry from aerospace to construction to electronics, they all need specific metal parts that are tailored to their unique requirements.
Yeah.
And then, fueling this even further is the increasing adoption of modern manufacturing technologies and automation. Things like robotics and computer-controlled machinery. This is really happening on the shop floor inside the fabrication plants. These advancements are they're really boosting efficiency and output, and that's pushing the market forward for sure.
So, um, let's get a bit more granular here. Let's look at the regional breakdown of this global market, starting with the current picture in 2025.
Oh, good.
So North America is it's kind of the big dog right now, holding over 40% of the global market share, which translates to a market size of USD 998.2 million in 2025.
Mm-hmm. And while North America has the biggest piece of the pie, the projected growth is it's a bit more it's a bit more moderate compared to what we're seeing in some other regions. They're looking at a KGR of 3.7% from 2025 to 2033.
Okay, and within North America, the U.S. market is like the powerhouse, right? I mean, they're
Mhm.
accounting for USD 257.4 million in 2025.
Right.
And the report anticipates a CAGR of 3.5% for the U.S. What's driving that?
Well, it's largely attributed to two main factors: the increasing integration of automation in manufacturing, and then the strength of their aerospace and defense industries.
Yeah, that makes sense. What about our neighbors to the north?
So Canada is it's a smaller market for sure at USD 1,103.8 million in 2025, but they're expected to grow a bit faster with a KGR of 4.5%, and that growth is being supported by government investments in infrastructure projects and a rising demand for prefabricated metal structures.
Gotcha. And rounding out North America, we have Mexico's market, which is estimated at USD 837 million in 2025, with a projected CAGR of 4.2%. So what's really interesting is that North America's leading position is built on like this foundation of really advanced infrastructure. They've got widespread industrial activity, and they've historically been early adopters of new technologies. Plus, they've got a strong presence of well-established companies in the metal fabrication space.
Yeah, all of those factors are definitely contributing to their
Right.
their dominance.
Okay, so let's hop across the Atlantic now and take a look at Europe. They hold the second largest market share globally at over 30%, with a market size of USD 709.4 million in 2025.
And their projected CAGR is 4.3% from 2025 to 2033. So that indicates pretty steady and consistent growth.
Right.
But it is worth noting that within Europe, there's some pretty interesting variations in the growth rates of individual countries.
Right, like the UK market, they're standing at USD 1,211.2 million with a pretty healthy CAGR of 5.1%. What's pushing that growth?
Well, the report links that to the increasing investment in renewable energy projects, especially the development of offshore wind farms.
Makes sense.
And then you have France with a market size of USD 663.3 million, and they have a more modest projected CAGR of 3.5%. And then Germany, which is, a major industrial powerhouse, they boast a market size of USD 1,427.5 million and a CAGR of 4.5%. And that's really being fueled by their robust industrial base and the strong demand coming from their automotive and equipment manufacturing sectors.
Okay, so we've got Italy's market is at USD 620 million with a KGR of 3.7%. Russia, with a market size of USD 1117.5 million, is projected to grow at a KGR of 3.3%. And then, of course, you've got Spain, Sweden, Denmark, Switzerland, Luxembourg, and the rest of Europe, each with their own figures. But what's the big picture here?
So the key takeaway for Europe is that they've got this strong industrial heritage, and it's being coupled with an increasing focus on sustainable manufacturing practices. They're really concerned about their environmental footprint. And then, you've got the demand for precision engineered metal components coming from their well-established automotive industry. And then the growing renewable energy sector is also a significant driver of growth, all across the continent.
Gotcha. So now let's shift our focus to a region that's really generating a lot of buzz for its growth potential,
Yeah.
the Asia-Pacific region, or APAC.
Yeah.
So they hold around 23% of the global market share with a market size of USD 566.4 million in 2025. But the really eye-catching number here is their projected CAGR, a remarkable 7.9%. That's the fastest growth rate globally.
Yeah, I mean that's really dynamic. And when you start to break it down and look at the individual countries, the picture becomes even clearer. So China, with a market size of USD 5.9 million, they're projected to grow at 7.4% annually, and that's being driven by their incredibly rapid pace of industrialization. They've got these massive urban construction projects underway, and there's a strong push towards adopting, smart manufacturing technologies.
Wow. Yeah. What about Japan and South Korea?
So, Japan at USD 823.4 million has a projected CG of 6.4%, and then South Korea, with a market of USD 716 million, is looking at a 7% growth rate.
Okay.
But the real star of the show in APAC is definitely India. Yeah, their 2025 market size is USD 596.6 million, but they've got the highest national KGR at a really impressive 9.8%. And this growth it's being fueled by large-scale railway expansion projects that are happening there, and then you've got the Indian government's Make in India initiative, which is really actively promoting and encouraging local manufacturing. And that level of growth, it really signifies a major transformation in India's manufacturing capabilities, and it could even potentially create new global supply chain dynamics. It's a really exciting time for India.
Yeah, for sure. And it looks like Australia, Singapore, Taiwan, and the Southeast Asia region they're all showing really robust growth within APAC as well, with CAGRs ranging from 7.2% to 8.7%.
Exactly. So, the big story in APAC is really one of rapid industrialization, particularly in those economic powerhouses like China and India. They've got this super competitive manufacturing environment, and they're seeing just massive investments in infrastructure development. All of that is contributing to this really impressive growth that we're seeing in metal fabrication.
Okay, so let's turn our attention now to South America. They hold over a 5% share of the global market with the size of USD 944.7 million in 2025 and a projected CAGR of 5.9%.
Right. So within South America, Brazil is kind of the key player. They've got a market size of USD 404.3 million and a CAGR of 6.5%. And their growth it's being driven partly by activities in oil and gas exploration, which is pretty significant there. And then you've got Argentina at USD 158.7 million with a slightly higher projected CGR of 6.8%. And their growth is supported by their automotive and transportation industries.
Okay, and then you've got Colombia, Peru, and Chile. They're all contributing to the South American market as well, each with their own growth projections.
Exactly. So The growth in South America it's a bit more moderate compared to some of the other regions that we've talked about, but it's still pretty noteworthy. It's being supported by ongoing activity in the construction and automotive sectors, and government initiatives are definitely playing a role as well. But economic stability in the region can be a bit of a wild card, and that can influence the pace of growth.
All right. Now, let's look at the Middle East. They account for around 2% of the global market with a size of USD 994.4 million in 2025 and a projected CGR of 6.5%.
Right. So, the big story in the Middle East is the rapid pace of infrastructure development that's happening in countries like the UAE, Saudi Arabia, and Qatar. Saudi Arabia, in particular, with a market size of USD 350 million and an AGR of 6.8%, is really benefiting from those ambitious Vision 2030 mega projects that they've got going on. And then you've got Turkey at USD 79.6 million, with an even higher projected KGR of 7.1%, and their growth is being fueled by their manufacturing, construction, and automotive sectors.
Gotcha. So the UAE and Egypt are also showing some pretty solid growth within the Middle East region as well.
Absolutely. So it's really the booming construction sector, alongside significant activity in the oil and gas industries, that's really driving the demand for fabricated metals in this part of the world.
Okay, so last but not least, let's consider Africa. They hold around 1% of the global market, with the size of USD 546.9 million in 2025 and a projected DKGR of 5.5%.
Right. So in Africa, Nigeria, with a market size of USD 43.8 million and a CAGR of 5.7%, is seeing growth that's being driven by the demand for steel, which is being used in a lot of urban development projects that are happening there. And then you've got South Africa at USD 192.5 million with a slightly higher CGR of 6.4%, and their growth is supported by demand from their mining sector, which is a big part of their economy.
Right. So while Africa's current market share is, it's smaller compared to some of the other regions that we've talked about, the steady growth that they're experiencing it's still pretty significant, and it's being driven by key sectors like mining and construction, and there's a lot of potential for further expansion as industrialization continues to progress across the continent.
Absolutely.
Okay, so let's kind of change our perspective a little bit here and look at the market from the angle of the types of services that are being offered. So the report identifies machining as the dominant category.
Right.
So can you kind of unpack that a little bit? What exactly does machining involve, and why is it so important?
Sure. So machining, it encompasses a whole range of processes, like milling, turning, and drilling, and it's really a fundamental process for achieving those precise shapes and finishes on metal components. And it's a widely used service across all sorts of major industries like automotive, aerospace, and just general industrial manufacturing. I mean, you can't build much of anything without it. And another thing that makes it so essential is its versatility. The fact that it can work with such a wide array of metals, that makes it a really indispensable service for creating both standard and highly customized fabricated metal parts.
Gotcha. So now the report highlights punching as the fastest growing service category, which is pretty interesting.
It is.
So for our listeners who might not be as familiar with punching, can you explain what that involves?
Of course. So punching basically involves using a punch and a die, which are specialized tools to create holes or shapes in sheets of metal.
Okay.
And this growth in punching, it's being fueled by this increasing need for high efficiency and cost effective metal processing, especially in industries like electronics, appliance manufacturing, and construction. Where you need to produce large volumes of components that have repetitive shapes. And the advancements in the adoption of automated punching machines are really making a big difference here. They're significantly increasing production speed and accuracy, which is a huge advantage for mass manufacturing.
Okay, that makes sense. So let's shift our focus one more time here, and this time we're going to look at the industries that are the primary consumers of metal fabrication services.
Yeah.
So the report indicates that construction is currently the dominant end use sector.
Right.
And I mean, that makes sense when you think about it, right? I mean, the sheer volume of fabricated metal that goes into building, structures and infrastructure projects. I mean, everything from steel beams to reinforcing bars. It's just a huge amount of metal.
Yeah, it's really the backbone of so many construction endeavors, and,
Right.
and with with the growing global emphasis on sustainable building practices and the continuing trend of urbanization, the demand from this sector is it's only going to increase.
Totally. And then the end use sector that's experiencing the most rapid growth, according to this report, is automotive. What's driving that growth?
So that growth is it's mainly coming down to the increasing demand for vehicles that are lighter but also higher performing, and this includes the rapidly expanding electric vehicle market, EVs. So this is necessitating the use of more advanced fabricated metal components in areas like the chassis, body panels, and even within the powertrain itself. And then you've got the ongoing advancements in automotive manufacturing technologies, and it's also playing a crucial role in driving this demand. It's really fascinating to think about how metal fabrication is now at the forefront of this electric vehicle revolution that's happening.
Yeah, it's pretty amazing to see how this industry is evolving and adapting to meet the needs of these new and emerging sectors.
Absolutely.
So, okay, we've examined the market size and growth. We've looked at the regional dynamics, and we've looked at the key service and end use segments. What are the main forces that are really propelling this market forward?
So the report points to several key market drivers, and firstly, there's the continuous expansion of construction and infrastructure projects, worldwide. This is a big one. So as economies develop and urban populations grow, the need for new buildings, transportation networks, utilities, all of that, it just keeps increasing, and all of those things require a substantial amount of fabricated metal.
Yeah, I mean that's a pretty clear connection.
Yeah.
And then the second key driver that you mentioned was the increasing demand for lightweight materials, particularly in the automotive and aerospace industries.
Right. So the push for greater fuel efficiency and reduced emissions is really pushing manufacturers to utilize lighter materials, and metal components are a big part of that.
Yeah, makes sense. And what was that third key driver that you mentioned?
Oh, right. So the third driver is the growing adoption of automation and robotics in manufacturing processes across all sorts of industries, and this is really significant. Automation, it enhances production efficiency, it improves precision, and it can lead to long-term cost reductions, which makes it a really compelling investment for metal fabricators.
Yeah, absolutely. So, of course, every market faces its own set of challenges, right? I mean,
Hmm.
there's no market out there that's just smooth sailing all the time.
Right.
So, what are some of the restraints that the report identifies for the metal fabrication market?
Well, one significant restraint is the high upfront investment costs that are associated with acquiring, that modern and sophisticated fabrication equipment and implementing those advanced automation technologies. This can be it can be a pretty substantial barrier to entry or expansion for companies, especially smaller companies that are trying to get into the market or grow their existing
Yeah,
operations.
that makes sense.
And then another challenge that's highlighted is the increasing stringency of environmental regulations that impact metal processing operations. So, adhering to these regulations, it can increase operational costs and complexity for fabrication businesses.
Right, because they have to invest in new technologies and processes that are more environmentally friendly.
Exactly. Metal fabricators are increasingly needing to find and implement those more sustainable operating practices.
So, kind of looking ahead now, what are some of the key trends that are expected to shape the future of the metal fabrication industry?
Well, the report spotlights a couple of really interesting trends. One is the growing application of 3D printing technologies for creating highly customized and really complex metal components, and this is really opening up entirely new possibilities for product design and manufacturing.
Yeah, that's a big shift, moving beyond those traditional subtractive methods to additive manufacturing.
Absolutely. And then another key trend is the increasing integration of IoT, or the Internet of Things, which is, where devices and sensors are all connected, and they share data, and also smart monitoring technologies. So these are being integrated into fabrication processes, and this allows for real-time data collection and analysis, which can lead to, improvements in efficiency, predictive maintenance, and just overall process optimization. So, when we talk about IoT in metal fabrication, we might be talking about sensors on machinery that are monitoring performance, and predicting when maintenance is needed, or tracking material flow in real time to optimize production schedules.
So it's really a move towards a more interconnected and data-driven approach to metal fabrication.
Exactly.
So before we wrap up, I'd like to touch briefly on the competitive landscape of this market. The report describes it as highly competitive. What factors are contributing to that?
Well, it seems to be driven by a combination of factors, really. So the ongoing advancements in automation and precision engineering are in some ways, making it easier for new players to enter the market. And then there's just this constant demand for more spiralized and customized metal components from a whole range of different industries.
So companies are really competing on their ability to leverage technology to achieve those high levels of production efficiency, and to offer cost-effective, high quality, and highly customized solutions to their clients.
Exactly.
And the report even gives a few examples of recent strategic collaborations and acquisitions that have been happening in the market.
Yeah, like a Tart Engineering, they recently launched a full suite of services in Australia. And then you've got Victaulic. They acquired Tennessee Metal Fabricating to strengthen their presence in the infrastructure sector. And then Vulcan Industries, they acquired Aftech to enhance their sheet metal fabrication capabilities.
Okay, so those are just a few examples, but they really illustrate the various strategies that companies are employing to expand their service offerings, to increase their production capacity, and to gain access to specific market segments or technological expertise.
Right. And another interesting collaboration is the one between Trump EF and Jungheinrich. They're working together on intralogistic solutions for sheet metal fabrication, and this really highlights the growing importance of automation, throughout that entire production and logistics chain. And then you've got Hoare Industrial Partners. They acquired Richland Metal Fabricators, and that points to this ongoing trend of consolidation within the industry, with a focus on specialized areas like precision sheet metal and machining services.
Okay, so let's wrap up this deep dive. We've covered a lot of ground here in understanding the global metal fabrication market. So to kind of quickly summarize the key takeaways.
Sure. So we've seen that the global metal fabrication market in 2025 is substantial. It's nearing USD 25 billion, and it's projected for significant growth over the coming years, driven by that healthy CGR that we talked about.
Right. And we've also highlighted the notable regional differences with North America currently holding the largest market share, but the Asia Pacific region, particularly India, is demonstrating the most rapid growth.
Right. And then within the service segments, punching is identified as the fastest growing, while machining remains the dominant service. And then looking at end use industries, construction is the largest consumer of fabricated metals, but the automotive sector is expanding at the fastest rate.
Yeah. And finally, we've touched on the key factors that are driving this market. Things like infrastructure development and the demand for lightweight materials. We've talked about the challenges, like the high initial investment costs, and then we've also explored some of the emerging trends, including 3D printing and the integration of IoT technologies.
Exactly.
So. Considering all these trends that we've explored today, here's a final thought for you to consider. Given the significant growth and the advancements that are happening in metal fabrication, what emerging industries or innovative applications do you anticipate will be most profoundly impacted in the years ahead? What new possibilities might this growth unlock that we haven't even haven't even considered in our discussion today?
Yeah, that's a great question, and I think it's one that's definitely worth pondering. I mean, the potential here is really vast,
It is. It's an exciting time to be following this industry.
for sure.
All right. Well, that's it for today's deep dive.
Thanks for having me. It was a great discussion.
Yeah, absolutely. And as always, thanks to all of our listeners for tuning in.
We'll see you next time.
See you next time.